we're still heading higher. That's the bottom line. The gold and silver prices are clearly moving in the right direction, and the equities are now starting to respond to it. But we've got a lot further to go.
If you're looking for a simple, secure way to invest in physical gold and silver, check out Hard Assets Alliance at hardassetsalliance.com.
Greetings. My name's Trey Reik of Wealthion, and we're here today with one of our favorite partners from SCP Resource Finance up in Toronto, John Waldie, who heads up their private client family office business and has been doing the same thing for SCP and Sprott, if I'm not mistaken, for a quarter century. So you've been through a few cycles, and obviously it's pretty front page news that gold's up to 3,800, and I actually noticed silver is now 46.5. I have to check it on a daily basis. It seems to be going up about 50 cents or $1 a day. But our viewers have heard a little bit about the firm and what you do. We spoke a bit yesterday, and I thought I would just jump in with sort of a bench clearing question. So on a scale of 1 to 10, how hot is SCP's business right now?
It's a 12. It's off the scale. It's really it's very exciting to be part of this. It's even as recently as the last interview, which I think was just maybe 6 weeks ago. The movement since then has been dramatic. As you stated correctly, we're at 3,800 gold, and now silver has just gone. It's now catching up, and it's as we thought. It's probably going to exceed the run in gold. Silver alone today is up 3.6%. On the near-term futures, it's actually 47 and change. And I felt that when it was going to break through 40, it was going to run very hard, very quickly, and that's exactly what's happened. So it's also nice to be right when you see sort of technical levels being broken and further upside. So it's been extremely busy. We're all quite tired, but tired in a good way because things have gone very, very well for our clients and for our business.
So I was just talking with Justin Chan, the head of research in London, a few minutes ago, and he was telling me about the deal flow that comes through SCP. And can you give us an idea of when you have a fever pitch like this, are you seeing one deal a week or?
Yeah, so we're in terms of where we're at within a selling group or syndicate or co-lead, depends. But certainly in terms of the deal flow on the street overall, I'm seeing 5 to 6 deals a day. But that's the entire street that's within our sector. In terms of if we're sort of co-lead or lead, in August, there were a couple of days that we're doing 2 or 3 a week, which is remarkable that we're co-lead on, and they're coming fast and furious. So overall, I would suggest there's probably one deal every 7 days on average throughout the entire summer, which is unusual, and of course continuing through into September. And there's always a little bit of a lull around Beaver Creek, and then it picks right up again right after Beaver Creek, and we're seeing that again happening now. An awful lot of placement, and people are raising money when the sun is shining and the hay is growing.
Beaver Creek, as John's referring to for viewers, is there's really 2 big gold conferences each year: BMO, which is sort of in February, March, and then 6 months later in September, the Denver Gold Forum has its big conference, and just ahead of that is the Beaver Creek Conference. Can you explain a little bit about what Beaver Creek's all about?
It's basically where all the different players, all the different issuers and investment bankers get together. And they basically are exchanging business cards and exchanging their stories to the investment bankers. And then from that, there would be an awful lot of deal flow that stems from that. And so it's a huge conference. I think that's over 5 days in total. And a lot of work gets transacted on the back of that.
But the market cap of the companies is below the majors, correct?
Yeah. It's more in our space, which would be, explorers and developers.
Mm-hmm.
Yeah, it's not for the majors. The majors don't need to attend that. The producers don't need to attend that.
So do you attribute some of the September flow to meetings that happened there? I mean, is it that simple? Everybody gets together and then they do stuff?
Absolutely.
Uh-huh.
You see a big uptick, and we're seeing that right now.
Uh-huh.
And then there's also a big rush to make sure that those issuers are looking to raise, that they've got some material catalyst to present to the banking side at that conference. And so you see a lot of that too. So you'll see a lot of drill-driven results. You'll see a lot of major catalysts sort of big push ahead of that. Yeah, so it's, people talk about PDAC for the retail, which is the largest conference of its type in the world here in Toronto. But yeah, Beaver Creek's important.
So in the years that I've been following this, when you start to see a bunch of deals like you guys are seeing, at least in past cycles, it has been a sign that maybe things are getting ahead of themselves, or the market is starting to finance more questionable projects or that type of thing. But it doesn't seem to be slowing down this time around. Why do you think that is?
Because I think we're still heading higher. That's the bottom line. I don't think we haven't hit that insane, we talked about exponential type of share prices yet. The gold and silver prices are clearly moving in the right direction, and the equities are now starting to respond to it. But we've got a lot further to go. We're just starting to see news articles talking about the generalist investor. Your typical individual, especially in the States, beginning to pay attention to precious metal equity. And that's been completely almost negligible to zero. And now we're starting to get people paying attention. People thinking that we're just invested in tech stocks and the large cap on the NASDAQ that are now saying, oh, well, let's look at some gold stocks. So that's just starting. And Rick Rule likes to say that if you can get up to a traditional level, mean level of like 3% of a generalist, having that in the portfolio up from like 0 to 0.5, that's just, you can do the math. I mean, that's a 6x type of increase in buying capacity on the retail side that could be potentially buying precious metal equities. So we are at just starting to get indications that that's occurring now.
So in, say, the past couple of years, it would be fair to say that investors that have been interested in SCP's deal flow have a tendency to have been directed managers, like gold managers, like a John Hathaway, and hedge funds that are focused on the sector, and certain private equity investors, say in London. But the retail investor really hasn't been present over the past couple of years. Isn't that the case?
The past decade, and especially in the U.S. You'll see that Canadians are more comfortable, certain countries are more comfortable, that Australians are more comfortable investing in gold and mining equity because a big part of our indices are in that space. So Canadian or Australian have been investing in this area for a lot longer and are more comfortable. So their allocation is typically much higher. But even then, Canadian or Aussies have been investing in other sectors, and now they're returning in full force, as they should be.
Throughout September, we're shining the spotlight on gold with a lineup of expert conversations, sharp market analysis, and practical investment guidance. To dive deeper, make sure to grab our complimentary gold investing report using the link in the description below. And Wealthion, together with SCP Resource Finance, will be hosting a global silver conference this October in Toronto. Eric Sprott will be delivering the keynote, and it promises to be a landmark gathering for silver investors. You can find out more in the details in the description below.
And you're, of course, focusing on Canadian investors. Will be able to bridge that gap, hopefully at some time, when the SCP Wealthion joint venture is approved by FINRA, but we're awaiting our approvals. That'd be fun to get some attention down in the United States. But in terms of the Canadian investors that you're representing and dealing with, you've started to notice an uptick in sort of family office and individual investors?
Yes, very much so. And it's not just Canada, it's international as well. So out of Europe. But the family offices have been a new sector or a new buyer into the space, where they've been traditionally quite conservative. But now they realize that it's important to have an allocation to gold and to silver. And that's been a big increase in the last 18 months. Mm-hmm. Yeah. And it's not letting up either. It's just increasing.
And just to give people, a parameter. So NVIDIA's spoiled everybody, right? Because it goes up every day and it's 4.4 trillion, all that stuff. But when you get into the real world, if you make 50% during a year, on a stock in the stock market, that's a pretty damn good return, right? But in the gold sector, given the leverage of the beta to bullion, and especially in the part of the sector that you guys deal with, while you obviously, past performance is no prediction of future performance and all of those disclaimers, can you give us a general idea of, what's a possible return? What's the top return? What's the range of returns that you're seeing in some of these deals in the current environment?
Yeah, so the range of returns within our sector can be, like in the last 18 months, on the low side, it would be 50%. On the high side, 400%. And as you could imagine, and I was just looking at a position, a large position that I have on in my book of business. And we bought the position 2 years ago as a unit financing. And that position is now up 7.5 times in value because it came as a unit. So I don't know if your investors are familiar with buying placements, but often when you buy a placement, you get a share and you'll get a half warrant or a full warrant. And if the stock does well, the half warrant or full warrant become extremely valuable and really sweeten the type of return. So in this case, the underlying was up 4.5 times. But that warrant kicking in made it a 7x return. And it's still, we still hold the position. And again, more really good fundamental result today. And the stock was up another 15% today alone.
So what sector is it? Is it a gold company?
That's a gold late stage developer that will be a mine in probably 18 to 24 months here in Canada.
Mm-hmm. And are the warrants, are you still holding them in warrant form or have you exercised those?
We haven't exercised them yet. We'll probably start to exercise them. They expire out in August of 26, so we have lots of time to do that, but it might be nice to exercise them now.
The stock must be significantly above the exercise price, correct?
The exercise price is 70 cents. The stock is trading at $2.70.
I gotcha. Okay.
So it's $2. And so, yeah.
Does the company need that money? Do they want people to do it?
No, they're well financed. They don't need it. It's all further upside. But the company is doing a major drill program, so they don't need this. They're funded, and if they do need to raise money, they can also do a flow through or.
Yep, and we all know Rick Rule's number one rule is to get a warrant. He's been talking about warrants for 2 decades and points out that's the difference between a great return and a super return. True.
But there is, I think there is some advice to give your audience that if you've got a full warrant, and I know Rick will disagree with it, but if you have a full warrant that's good for 5 years, that's a little bit too good. So warrants are often looked at as a sweetener. And if the sweetener is too good,
it may not be the best company. Is that what you mean?
That's what I'm saying. If the sweetener is just too high, too rich,
I see.
Usually you would get a half warrant good for 2 years, not a 5-year warrant for a full warrant.
Got it. So half a warrant for a couple of years, limited visibility, good idea. full warrant for as long as you want, bad idea.
Right?
Right?
I think that's my take.
Mhm.
Yes, it's just too much. And, yeah.
Now, you deal with Canadian investors currently, but if you were licensed in the U.S., which we're trying to accomplish, can U.S. investors participate in those placements with the warrant?
Yes, they can. Yeah, they
And
can.
are
And what
there
happens?
limitations on selling or liquidation or holding period?
There is. There is a legend that's put on private placements, and it's a 6-month hold. And then you have to what's called scrub the legend in order to be in a position to sell the security.
Mm-hmm.
And that takes some time to remove that legend. So it's in Canada. Typically, there's a 4-month hold on a private placement, and the U.S. is a 6-month, and then a legend removal process.
And when you mentioned the scrubbing, is that through the transfer agent or through the issuer, or how does that get taken off?
Well, there are a few steps in that process, and so that's done usually through clearance. And it has to go back to the issuer as well.
And it can take a month, or
it can take months, and it depends. You have to have all the different parties cooperating and willing to do it and respond in a timely manner.
Interesting.
Yeah.
And in terms of how far this market has gone, are you getting nervous yet, or how do you stay calm, or what are you looking for on gold and silver? What do you expect for the next 6 to 12 months?
Well, I sort of touched on it. I think that as I said the last time we met, I said we're in the second or third inning. I think we might be in the fourth inning now, but I think we've got a lot of game to play. And I think a good indicator of that is what I mentioned is the generalist investor. They're not here yet, not here at all. But when you have the generalist investor talking like their taxi driver saying, "Oh, I just bought this great gold stock," like they did back in the tech boom in '99, then I think you've got the makings of a bubble. We aren't even there yet. You're getting some, business news channels talking about gold, and they're falling as they should. They have to follow all the different sectors, but we're not there yet. We're not. We don't have the general.
So it's difficult to generalize valuations in your sector because, by definition, explorers and developers don't have earnings. They're consuming capital, burning capital, and they require new capital to get the project built. That's the sector that you guys are focused on. In the larger cap sector, I've noticed recently that, prices are sort of gravitating up to about 1 times NAV in the very generous 5% discount that most sell-side firms look at this. But so in other words, gold stocks at the beginning of the year were historically cheap. And now they're trading back towards the historic range, of in relation to the gold price itself and the NAV of the underlying company. And from here, I would say, roughly there's another 100% to go. What I mean by that is we were severely undervalued. Now the P's have come up sort of NAV, gold relation, but there's a whole nother sector from just gold really staying at this current price, much less going higher. Is that the way you look at it?
Well, you're talking about the large mega producers or large cap producers, and certainly you're not wrong. And they're always in that subsector, the large cap. There's always a lag to the price of gold, and so you see gold appreciate significantly over the last 12 months. It takes those producers 2 or 3 or even 4 quarters for that to trickle down to their bottom line and to their net earnings. And so we're just beginning to see some of those returns come in. And on the back of that, then their share price starts reacting. So in terms of your typical playbook, it's traditionally been, you look at the majors first, and then the intermediates, then the juniors, and then the explore codes and developers. And the first to move typically have been the majors, and then trickling all the way down. And 2 quarters later, each, as you go downstream to the smaller cap, then they start to move following the big fish. That's traditionally what's been happening. The big fish in this case, a couple of them they couldn't get out of their way because their cost structures are so high. So their prices have been in the penalty box mostly for the last couple of years. And it's taken them a while to get a free pass. They've almost got like a 10-minute or a game misconduct from the market. Whereas the smaller cap and the explorers and developers have responded very strongly to, and they've outperformed the majors. So in our space, which is the explorers and developers, which are smaller cap, they've outperformed in a significant way. But I think now the majors are going to start responding, and they best, because if they can't make money at these prices, they never will. So it's been a little bit inverted in terms of that.
So when you look at sort of price to NAV generally for the producers and maybe the mid-tier, what is the metric or ratio that you might encourage viewers to look at to measure where we are in the cycle of explorers and developers? What do you look for? How the gold is valued in the ground per ounce, or what are the metrics that are relevant?
So in our space, the most relevant metric is the price of the underlying. So the price of gold and silver, and that will drive everything. Because in our space, we don't have producers. We do have a few, but most of our space is, as I said, explorers and developers. And so for that, you have to look at resources. What's the growth of that resource base? Measured, indicated, and inferred. How are they converting that into a mining inventory? In other words, reserves. Where are they moving on their studies from PEA to PFS? In other words, preliminary economic assessment to preliminary feasibility study to definitive feasibility study to investment decision. Where are they at? And all of those. Those are the important metrics in our space and how they're progressing. Then there's all sorts of other things we have to rely on our analysts in terms of metallurgy, how the structures hold together. Is the structure cohesive enough to be a mine, or is it all nuggety and it doesn't make sense, it doesn't hold together? That's where we spend most of our time on the deep diligence in terms of doing the research and understanding the deposit. And then obviously jurisdiction is important, and really important is the actual management team and who's driving this and how sophisticated they are and have they done it before, and how well we know and trust them.
So that was an enormous amount of ground that you just covered. So backing up, if you could give a layman's explanation a little bit more than you did about the difference between a resource and a reserve in the gold or precious metal mining industry.
Yeah, in layman's terms, it's a matter of confidence. And so when you're typically drilling, you're drilling at far out spaces that you're drilling at 50-meter intervals. So your confidence level is low. And so that would be potentially called an inferred resource. And so what you want to be able to do is drill with higher level of confidence, and that means you're moving from your preliminary feasibility study towards a definitive feasibility study. And it just means you are very confident of what you actually have in the ground. In other words, your spacing is tight and you know what you've got. If you try to go ahead and produce a mine on a wide space drill program, you're going to get in big, big trouble. And we've seen that in the past. We've seen mines fail because they prematurely made a decision to actually produce without proper drilling and proper mine plan.
So this is very interesting. And again, you probably think we're beating a horse here, but when you talk about 50 meters, how narrow do the drill spacings have to get before your confidence is high? Now, I know that's a variable question, right? Different deposits, whether it's an open pit, low grade, or a high grade underground with veins, how close do the drill spacings have to get?
Well, about 25 meters is a good interval.
Right.
Yeah.
And how much do each one of these holes cost?
Depends how deep they are. And so generally you start out, if you're looking at an open pit style program, you're going down to 200, maybe 250 meters from surface, which you can do usually fairly well. And but if anything below that, then you're getting more into the underground. But a lot of this will depend on the actual geology that's what's there. You can do it, and again, this is what I refer and use and leverage our analysts and our economic geologists to explain all of that engineering work to me. My investors certainly don't rely on my great power. They rely on our team's great power. And so I certainly leverage that.
So I guess what I was trying to drive at was when viewers hear about a gold company that is drilling in Tanzania and they have a big, like they have 3 drill holes that they release phenomenal results from. What I'm trying to get to is that doesn't really mean that much over the long term, and that you always have to take that in context of the fact that you need another 100 holes, or 50 or whatever the number is to make sure, that you have what you have. And that's the process of building a resource. And resources are measured in thousands of tons, right? Hundreds of thousands of tons. And you have an assumption about grade, correct?
Right. You usually want to convert them into ounces, and then you have a grade. But when you're doing drilling, it's so important that you have a proper analyst looking at what those results are. You can get a headline, which could be crazy, like 100 meters at an ounce per ton. And so, okay, well, that's very interesting. And then you do a deeper dive and you find out that it's not true width. In other words, they went right down the vein. And it looks really long, but if actually it has no width to it, it's only like half a meter wide. It's called a director hole. In other words, it's a great headline, and the stock could move to the unsophisticated buyer. And that's why you've got to be able to, what's the true width? Does this hold together? And that's why you need a team of well-seasoned analysts to interpret that. A headline can be a very dangerous thing to follow unless you
And then to build the reserve quality or category, you have to have what's called a qualified party. I think it's called
a QP. Qualified QP person that does that work. That will look at your resource and then reserve and sign off on it.
And you have to make all these assumptions about the price of oil, the price of copper, what you're going to do, how you're going to do it, et cetera. And then they have what's called a bankable feasibility study at the very end. Right?
A bankable or a definitive feasibility study, correct, which is right at the very end. And from that, you create all your economics. So you'll figure out it's called an ASIC, all-in sustaining costs, which is supposed to include all costs of production. And that will give you your benchmark of what it will cost per ounce to produce. So if you've got gold at $3,500 and you've got an ASIC at $1,500, you've got a $2,000 per ounce margin.
And the reason that you would get involved in this very difficult, cost-intensive, long-term business is, as my sort of final run through resource reserve for our viewers, the gold in the ground when it's a resource and you're drilling a couple holes could be $25 an ounce. But by the time you get through, your PEA and your preliminary feasibility all the way to the end, that gold could be valued at $400 an ounce.
Right. So that's what you go as you're developing more confidence, as you're developing that resource, moving towards a reserve, you're also re-rating the multiple you're doing at the NAV. So when you're at an early stage, it could be a 0.2 times price to NAV. And then as you're developing more confidence, then we will be re-rating that towards a 0.6, even a 0.8. Or if it's basically a producer, then you could be at 1 to 1.2, depending on if it's silver, gold, or whatever that mine is doing. And that's how you see the price of the shares escalate over time as you near being an actual producing mine.
And in this process, that's why being involved with a company that's bringing a mine on life is really the only capital creation part of the secular opportunity of rising gold prices, right? That's where the leverage comes, is revaluing that gold in the ground as you do the development of the mine.
Right.
And then the last thing that's exciting is, before we leave this, is when the gold price goes up, because the assumptions for gold ounces to be included in the reserve are fairly strenuous. And what are major gold companies valuing their reserves at now? It's what, 2,200 or something like that? It's each year it goes up a bit.
Yes.
And it's very conservative. But each time the gold price goes up, you can move from resources, ounces that become profitable at the new price. And that's another place where you get leverage in gold equities, right?
Yes. So we're using a long-term gold price at 3,000 an ounce, okay, to drive our economic models.
But yeah, as the gold price goes up, companies with resources see them transfer to reserves. So it's just another part of the inherent leverage in the gold miners. So I have that correct, right?
Yes, you do. Yeah.
Okay. So, and in terms of the team, can you give us, like you mentioned, the phrase that I would use when you were talking about the importance of metallurgy, et cetera, is even when you have all this information, you still don't know if the mine's going to make money. And that's where I think the judgment of the SCP team comes in. Can you talk a little bit about that?
Right. So we try and use all the different departments and personnel to create our core list of names. So we have investment bankers. So you think of just bankers, they're doing, looking at economic models, but they're mostly actually engineers. So they understand the geology as well as understanding how to, project financial models. Our analysts are not just geologists; they're economic geologists. So they know how to do economic studies, and so that those two teams sort of all come together, and we have what's called a new names committee. And where they all have to make their own arguments as to why they like a certain company and why they don't like a certain company. And to make it through that process, there has to be consensus for our firm to accept a new name that will then be a core name that we follow and that we will put out research on, that we've given the thumbs up to, that potentially we could raise that company money should they need to raise money at some point in the future. So we're a small boutique, an expert in the space, and we're able to do that. Whereas if you go to a large bank-owned firm, there's no way they can do that type of sitting around a table and coming up with agreement and consent. It's not feasible.
And how many names are on your covered list?
Approximately 30.
And is that usually the number, or is it higher than?
It's been lower. The number has been expanding a little bit. Maybe it was 25. It might even be 35 right now. It has been expanding during this time. And then names will be removed once they're acquired or taken over, or they're producing and they're outside of our scope. And we need to look for new names. And so a lot of the challenge now is the low-hanging fruit. If you look, for example, in Canada at what are going to be the next mines in the next couple of years that are late stage, it's really only 2 or 3 names that are coming online. There are lots of interest.
What are those names?
Well, we have First Mining and Skeena. Those are probably going to be the next 2 that are going to be mines, and they're working towards that. So there are some permits that have to be granted in the case of First Mining, and then Skeena is well along. It's the road to production, and but in order to get to that stage, it can take 8 years to get to that stage, from drilling to getting indigenous nations to sign on. Everywhere in Canada is required, except in Newfoundland. You have to get all these agreements in place. And in any developed world, it takes a very long period of time. And that is why we like certain jurisdictions in Africa which you can get from drill to end production in 2 to 3 years, not 8 to 12 years. And so that's why you see an awful lot of interest in countries like Cote d'Ivoire and Guinea, which are jurisdictions which we follow and like, and you'll see all the majors are producing there. Mm-hmm. And it's fascinating to see how quickly you can develop a large and profitable resource.
So when you look at the 35 names that are in your core group, what percentage of those might be exposed to M&A activity? Are they too small or?
No, not at all. So we have right now, in that core list, I can think of 4 names that we flagged as takeover candidates. Mm-hmm. And we're highly convicted that they will be taken over. Mm-hmm. And in those cases, they would have a strategic investor that would own 19.9%. In other words, they're ready. When they hit 20%, you have to make a proposal. The engagement is then over. You have to either decide if you're going to take it over or announce your intentions. So those ones, for example, we like a company that's in Malawi in Africa, that's Natural Rutile. And they've been partnered with Rio Tinto now for some time. And Rio Tinto have been working on the property, doing tests to develop to help them decide if they're going to take it over or not. It's our view that they will. Mm-hmm. And they once the DFS, definitive feasibility study, has been reported, then Rio Tinto has 180 days to make a decision on that. Mm-hmm.
And as another part of SCP's business, I should mention Phil Martins, who's the head of investment banking in London, keeps a very low profile. But we do want to mention that Phil's out there with files on all of these companies and has been involved, and SCP has been involved in some of these deals as well, correct?
Oh, yeah, absolutely. We were involved in that company I mentioned from the very onset. We were on site. Our analysts go to these properties all the way around the world. And the day that one of our analysts showed up to Rick Rule's conference in the morning, he had already been up to Timmins on a site visit that morning. And then that afternoon, he was down in Florida. Our team tracks an awful lot of air miles.
Mm-hmm. That you brought up an interesting point about West Africa. Is there a part of the world that you're most excited about? Is that it? Is Africa the next decade of deposits?
Well, certainly it is, but you also have to be very careful what country you're dealing with in Africa. Mm-hmm. So, there's been an awful lot of issues with Ivanhoe and the DRC. They've with the Houthis and rebels. Mm-hmm. And corruption in certain parts. Then you've seen what's happened in Mali with the government holding hostage of the Resolute board, literally holding them for ransom, which they actually acquiesced to. And those were very, very serious issues. And so now those countries are areas you really don't want to get involved in. Mm-hmm. So you have to be careful. But because you can go from drilling to development so quickly in some of these countries in Africa, you do have to pay attention. But some of them are discounted in terms of valuation due to jurisdictional risk. So that's another area that you have to look at.
Excellent. So this has been a great update on SCP's business, but I have to, since you said it's the 4th inning, I have to put you a little bit on the spot so that you squirm a bit. Give me a year-end target for gold and a year-end target for silver.
Calendar year-end?
Yeah. Or pick another time frame. What are you most comfortable?
Well, I think in 6 months, I think we're at 4,000 gold. Okay. And I think we're at 50 silver. Mm-hmm. And those numbers could be low, especially on the silver side. Again, when I said if we're going to break through 40, we're going to run, and mm-hmm. we have, at least the silver price is really gone. If we break through 50 on silver, it just goes even higher. We're having a silver conference here in Toronto, and Eric Sprott is going to be our keynote speaker, and he's going to dazzle with his projection in terms of silver price. Now, he's a huge silver bull, so you can take that as a caveat, but I understand that it's a triple-digit number. It's not a two-digit number.
And many Wealthion viewers have probably been getting my messages on their voicemails and in their emails. I've been reaching out to quite a few personally, and I want to underline what John just said, that on Thursday, the 23rd, at the Shangri-La Hotel in Toronto, we have an all-day presentation starting with Mr. Sprott, Mr. Silver, at 8 o'clock in the morning. And I will tell you, I've seen him speak at least 10 times, and he's almost as good as Rick Rule. But he's very, very good. And his assistant, Connor O'Brien, I think is going to be there. He's also presents different stats about silver silver doesn't get covered very well. So there's not a lot of information out there. There's not a lot of analysis about the industry. It's a byproduct, et cetera. But Connor and Eric have all the access to, what's really happening with volume trends and that type of thing around the world. So they're fun to listen to. We have Maria Smirnova, who everyone knows as Mrs. Silver. She's going to be speaking at lunch from Sprott. And we have 14 producers. I would say Pan American is the largest, and Michael Steinman will be there, and First Majestic. And then we move down through another 12 producers, a lot of which are in the core of the SCP family. So, and for folks who can't be there in person on the 23rd, we'll be doing a virtual replay, which will be on Saturday, October 25th. And I assume it will be a similar hour, 8 to 5-ish. And for Wealthion viewers who are interested in attending the conference, either in person or virtually, please make an effort to get in touch with us. You can get in touch with me, trey.reik@wealthion.com, and I'll get you registered. So we're very excited about that conference. Look forward to seeing you up there. And John, thanks for your time. We'll check back with you in another 6 weeks.
Very good. Well, we'll see you soon. We'll see you at the conference and next month.
Terrific. Thanks, John.
If you have any questions about how to navigate the current environment, Wealthion can help connect you with a vetted advisor to get a free portfolio review. Just click the link in the description below or head to wealthion.com/free. There's no obligation, and it will just take a few minutes of your time. Again, that's wealthion.com/free. Thanks so much for joining us. We'll see you again next time.